Welcome to the Finance Rebel Show. I'm Kamari Ellis, the Finance Rebel. If you don't know me, I'm a former portfolio manager where I would work on Wall Street, selling and buying and trading stocks, bonds, and ETFs. I'm also a recovering financial advisor where I would help people, make sense out of their overall financial situation and devise plans and strategy and a little bit of tactics to get them into a better position. Currently, I'm a tax advisor where I help people fight the IRS and help them devise tax strategies to lower their tax debt. Today, we got three stories for you. First story is mortgage rates. They're at an all-time high, haven't been this high since 2002. Second story is billionaires are fighting it out with the IRS over $10 million. Last story we're going to cover is allegedly there's an upcoming stock market crash, and we'll talk about that in just a second. Okay, the New York Times announced today, actually yesterday, the U.S. mortgage rates have jumped to the highest rate since 2002. Now, actually, earlier this year, they hit about the 7% rate. The funny thing about it is that they're peaking up over 7%, but there's many economists who are expecting that this is going to go over 8%. So when we look here, looking at the New York Times, right, it says here, the average 30-year mortgage rate has climbed above 7%, making it harder for buyers to afford homes, which are already in short supply. And homes are definitely in short supply because builders have been building, and this has been an issue since like 1950s. But interestingly enough, right, they're saying above 7%. I looked today before this broadcast, and I saw 7.25, 7.5, right? It really is going to depend on your credit rate and money and the lender. There's so many factors that go into this. But I'm wondering, are you all concerned now about buying a home? Are you thinking about buying a home? Or is increasing interest rates slowing you down? But what I'd say to people all the time is buy a home that you can afford, right? Don't just buy a home based on the interest rates or the mortgage payment. Buy a home that you can actually afford. Now, back in the day, they would say you should only buy a home that costs maybe two times, or it used to be like 1.5 times your salary. Nowadays, the standard is about maybe two times, maybe three times your salary. But, that's a good barometer, right? If you make $100,000, well, you can look at a home for $200,000. Good luck finding something decent there. 300,000, maybe a little bit more. But, I advocate for everybody to start with as small a home as possible. And I wouldn't be looking to upgrade anytime soon and getting a McMansion. So when you see here, you look at the chart, right? When we go back earlier this year, rates had already touched above 7%. Now it's doing it again. They cooled off a little bit earlier this year, and now they're doing it again. More people are starting to look for homes. People like to look for homes in the summertime, spring, summer, early fall, because a lot of times children are potentially moving schools and they're looking to do something else. But the way you're looking here, it could hit 8%. But I don't think you should be scared of that, right? Markets go up, markets go down. So I wouldn't necessarily wait to see something go down because you might miss out on an opportunity. Rather, I would try to find that works for you and your family's budget. And it's a place where you think about raising a home, or at least a place where you can start a family and then think about the next steps. All right. So here in this article, mortgage rates surged to a 21-year high this year, a jump that will make it even harder for buyers to afford homes in a market hampered by high prices and lower inventory. Now, if you remember, I just talked about how we've really kind of had an issue with home buying since like the 50s. We had a big boom, right after World War II. And we've had some building, but not at the rate that it needed to be overall. All right. So here it says the average 30-year mortgage rate, the most popular home loan in the United States, was 7.09%, up from 6.96% last week. Still high, still high. Freddie Mac said on Thursday, a year earlier, the 30-year mortgage rate was 5.13%. See, a lot of people have gotten spoiled. They got used to super low inflation rates. I mean, at one point, we were seeing 30-year mortgage rates below 3 and almost 2%. Anybody got that mortgage now? Don't refi, don't change it. Just rock with it. Just rock with it. In June, sales of existing homes fell nearly 19% from the year before, according to the National Association of Realtors. The scarcity of listings have kept home prices elevated. Scarcity, remember, everything's about supply and demand, right? The median price of existing homes was $410,200 in June, the second highest since the organization began tracking the data in 1999, down only marginally from a high of $413,800 a year ago. So that whole idea of 200,000, 300,000, it's kind of out the window, right? But here's the things you want to start doing as you get prepared to buying a home, if that's your desire. You want to keep your debt down, right? So there's a thing called DTI, debt to income ratio. And no, I'm not a mortgage broker. No, I'm not a real estate broker, right? So make sure you seek out qualified professionals before you make any move, right? But you want to make sure you keep your DTI down. And one of those figures that's kind of like a golden rule is to try to keep it below 28% or 0.28, right? Which is 28%. So you don't want your overall income being greater than 28%. And then if you can do that, the more the better, or the lower the better. Then a lot of times you can start getting things done with your mortgage broker at your bank or independent broker or one of those things. But again, what do y'all think? Are y'all planning on moving anytime soon? Make sure you drop that in the chat. All right, story number 2, billionaires versus the IRS. So there is a really, really popular billionaire who has made a Google God worth of money in the stock market. Former hedge fund operator. His name is Stephen Cohen. I'm going to put this up here. Oops, let me put it up a little bit higher. All right, billionaire Stephen Cohen fights a $10 million tax bill to derail IRS plan. So now, if y'all don't remember this, just going to put this out there a little bit. Stephen Cohen was a former hedge fund manager, made a boatload of money. The name of his hedge fund was SAC Capital. It got shut down because he got found guilty of insider trading, paid one of the biggest fines ever, 1.8 billion dollars. So he had to pay that. So that's where you might know him from. But he's in a little bit of a kerfuffle with the IRS because they're not agreeing on their taxes. And the IRS is saying he probably owes, at worst case scenario, an extra $10 million from what he's already paid. So this article is really interesting. I promise not to bore you too much what the issue is. And I think this is important for many of, average 9 to 5 folks who might have a side business or, a mom and pop business, because this man right here is filing as a sole proprietor or maybe a single member LLC. And the IRS is saying that the stuff is a little off kilter, right? So here, I'll just show you the screen on this. Let me see here. All right, so Steve Cohen is contesting an IRS service campaign to compel hundreds of money managers, including his Point72 Asset Management, to pay self-employment taxes on a main source of earnings. What that means is, real quick, main source of income. They're saying you have income. The question is, he's saying he has passive income through a partnership, but the IRS is saying that he has main source income through his business. And that's where the big kerfuffle is. And I don't know. I got to go back and do some tax law and see what tax courts have ruled on this before. I would say he probably does owe, but there might be a little bit of wiggle room there to make some things happen. But I think it's interesting. I think it's interesting for a lot of reasons. Now, the other thing about this man, I've been a big Steve Cohen fan for many, many years. If y'all didn't hear me, I used to manage money on Wall Street. So Steve Cohen was somebody that I knew I thought was great before I found out he was doing insider trading. Right. That kind of also brought me to my whole thing about when people were always trying to get it quick and be scammers. Nothing's quick. Nothing's fast. You got to put your time into it. You got to pay your dues. All right. But I find it interesting that Stephen Cohen is kind of principally built, not built, the show Billions is built around him loosely, right? There's a character on there by the name of David Axelrod, right? They call him Axe. And so they say his character is built around Stephen Cohen. And so I find it really intriguing that now y'all might not know about this, and I might be nerding out just a little bit. Let me just show you this here, right? So this is the show. This is the main cast of the show Billions. And you have David Axelrod in the center right here. I don't know if my screen is showing that, but he was colossal, made a whole bunch of trades, made a whole bunch of money, billions and billions of dollars, and built a firm called Axe Capital, SAC Capital, Axe Capital. And then from there, he got into trouble. And it's funny in the show, they always talk about, not always, they also talked about some insider trading. I love the show. Phylicia Rashad's daughter is on the show too, but we're not going to talk about that. But she's great. She's great. She is great. I want to show you this though, real quick. Let me show you this real quick.
America, the land of the free. Opportunity and self-determination. But you can't escape your enemies. Because I'm back now.
Now, the guy that's doing the voiceover work, that is actually David Axelrod. That's his character.
And I'm wide awake.
Let's go.
We're gonna hold the rich and powerful and criminal accountable for their actions, no matter the cost.
Now, that's the AG. Now, if y'all go back and do a little bit of research, if you look at New York, they had a very powerful AG or DA, forget which one, right? Eliot Spitzer. You can look that name up. He got into some trouble as well. And again, this AG got in trouble as well in the show. So it's funny how there's a lot of parallels to this show in real life, what actually happened. But, I find it interesting that if you're really into investing, finding shows that really talk about investing that are entertaining, but also educational as well, will help you to get a better grasp on the investing landscape.
It is my pleasure to announce my run for President of the United States.
He is dangerous. Consequences, if it happens, are too great.
I need you to get a message to Bobby.
Yeah, I set the rules and they follow me, don't need a hit.
Nothing puts a smile on my face like Bobby Axelrod making moves I never saw coming.
That's the problem with vacations. They always end too soon.
One last time before the fall.
I'm the real thing, this ain't a rerun.
Everything you do now matters in a way it didn't before. Chuck Rhodes is paying attention.
We're not waiting to pounce. We're gonna tell you what we're gonna do, and then we're gonna do it.
I almost had a panic attack.
I thought I heard wheezing.
You know how Truman said, the buck stops here?
You know I'm born with this.
I am the buck.
The gig is to protect you against all threats.
Can't touch this.
Are you prepared for the aftermath?
That's my kind of power.
You do have your eye on something.
That's my kind of power.
If a fella doesn't have his eye on something, how's he gonna know where he's going?
You know I'm born with this. That's my kind of power. That's my kind of power.
This is it. It's what you've been waiting for.
That's my kind of power.
All right, so this is the last season, season 7. And I'm not being paid, right? This is not an advertisement. I would just love to see the audience watch this and we could talk about this, and it could probably help you again understand some more investment terminology in the way that Wall Street works. But, again, great show. I'm not being paid. But let's move on to our third and final story of the day. And that story is many people are predicting that the stock market is going to crash. I shouldn't say many people. There's just this one famous guy. His name is Michael Burry. You might have heard of his name before in The Big Short. That was a big movie and a big book about Michael Lewis, and it did a lot of things. So again, this is news. This guy is always in media. Everybody's propping him up. Michael Burry was a doctor who turned into a hedge fund manager talking a lot about hedge funds today, but he's betting the farm that he's going to make money off of the stock market crashing. And that's what he got famous for back in 2007, 2008, because he predicted that the housing market was going to bring down the U.S. economy. Listen, y'all know I love history. History is a great predictor of the future, right? So I don't believe in studying history just to just rest on our laurels and marvel and romanticize about what happened in the past. I believe history can really predict and tell you what's going to happen in the future, right? They say history doesn't predict the future, but it kind of rhymes. So it's kind of similar to what can happen in the future. Why? Because humans have not changed. So if humans have done it in the past, more than likely humans will do it again in the future. So that's why it's so important to study history. All right, so here it says Michael Burry's of Big Short fame just bet $1.6 billion on a stock market crash. Now, I'm not going to make you belabor and go through all this, right? He makes calls like this all the time. You get a little bit of fame, you get lucky once or twice, and you hit big. You hit big. You get sought after a lot. Now, this guy, again, is really interesting. Like I said, he was a doctor before became a hedge fund manager. Now, they say he's a little bit on a spectrum. He's a little bit neurodivergent, so it helps him really focus on things and really get to solve some problems and come up with thesis, right? Investment ideas that he begins to execute. Now, they said he is buying a bunch of puts. What are puts? Now, y'all know when I talk about investments, I try to keep it on a basic level. But puts are a form of options, right? So normally when you talk about options, you have call options and you have put options, right? Calls usually are bought and used when the stock market is going up, when an investor thinks they can make money with the markets going up. Puts are put in place when they feel the stock market is going to go down. Michael Burry has brought puts on the S&P 500 as well as the NASDAQ. Now, I don't know, because with options, right, there are what's called expiration dates. They only last for a certain period of time. And so I don't know what his expiration dates are on those puts that he's brought. So he could be right. The market is at an all-time high or close to an all-time high. So it wouldn't be too far out of whack to think that the market could pull back a little bit. But y'all tell me, put in the comments, do you think the markets are going to crash or the markets are going to keep going? But what I tell you all is that no matter what's happening, make sure you have a good asset allocation. Make sure you understand your time horizon. Time horizon is meaning when do you need the money? Is this money for retirement? Is this money to buy a home? Is this money to start a business? Is this money to send your kid for college? All of those things matter. And then once you have a good understanding what your time horizon is, you can then say, I want all stocks. I want all bonds. I want a mixture of two. Because every asset class has their own set of characteristics, right? Just like if any of you all are parents and you have multiple children, they all have different personalities. So you can give one child $1,000 and you can give your second child $1,000 and then give your third child $1,000. They're all going to do different things. So just keep that in mind. Now, when we're looking at research and information, you don't want to just research or get information from one sole outlet, right? And you don't want to get it from one singular point of view. You want to look for various points of view. And again, anytime you are doing research, you want to go to primary sources as much as possible, right? And you want to look at different points of view. So I pulled up another point of view here where this guy says, Michael Burry is a one-trick pony. And the Big Short's investors' massive bet against the stock market is a sure loser, says veteran analyst, right? So when you look at this, right, this is polar opposite than the other argument we had. So we can look at both sides. Both sides could be true. But if you only look at one side, you're sure to be blindsided. So always look at multiple perspectives, multiple sources of information, right? So let's go here and look at what they said. So again, Michael Burry, one trick pony, right? Michael Burry placed bets worth a notional $1.6 billion against the S&P and NASDAQ last quarter. The big short investor is a one-trick pony, and his wager is a loser, says analyst Mark Shakin said. I've heard this guy before. I don't remember how to say his name right. Shakin argued past bears were shrewder, more influential, and had better track records than Burry. Well, that's also because we haven't had a a bear market in quite some time, right? We had a big fallout in 2009. We had a couple of dips along the way, but nothing long range. Partly because the Fed has been pumping free money, cheap money into the mortgage and real estate industries. So a lot of this market has been artificially pumped up. So it has nothing to do but go up. But like I said a few minutes ago, the market is probably due to have a little bit of correction, a little bit pull down. That wouldn't surprise me at all. But going back into this piece, let's see what he says. And again, this comes from Market Insider, one of the insider brands. Michael Burry shocked Wall Street this week by revealing he placed wagers on that notional S&P 500 and NASDAQ last quarter. But one veteran said his apparent bet on stock market crash is a losing one. Sorry, y'all. He's going to be wrong like Mike Wilson was wrong. Y'all might not know who that is, but look it up. All right, the founder and CEO of Chaikin Analytics told Benzaga this week. Now, Benzaga is a financial news blog. He was referring to Morgan Stanley's chief U.S. equity strategist who was caught off guard by the historical rally in stocks this year and issued a mea culpa in late July. Chaikin dismissed the idea that Burry's portfolio update spooked retail investors into selling stocks this week. I promise you that nobody on Reddit follows Michael Burry. I don't know about that. Michael Burry actually has a nice following on Reddit. But again, I don't believe in following Reddits or even these articles. I believe that everybody doing their own research. So go look at the research. Look at some basic charts. Where is the stock market at now? Where's the S&P at right now? How far is it going up? At some point, it's going to come down. Do you believe him or do you not believe him? But that's how you should kind of process it, right? Now, going back to this, and let me blow this up just a little bit. In fact, the key driver of the meme stock raise in early 2021 was that Burry invested in GameStop in 2019 and wrote several letters to very game retailer bosses that highlighted the excessive short interest against its stock. That's also Burryology subreddit with 17,000 members. Again, I wouldn't say that's a little bit of people, all right, that dedicated to studying Burry and tracking his trades. I'm going to say this too, because I do believe we live in a culture of, what I want to call it, the culture of fanaticism around celebrities. So we have a lot of people who do celebrity worship, whether it's in basketball and movies and entertainment, but even on the stock market. Don't believe any of them, because listen, anybody can be wrong at any time. The stock market will turn on a dime and will have you heartbroken, naked, and we've been broke. So, keep that in mind. And again, people can get something right. A clock is right twice. That don't mean that it's the right way you want to go going forward. So again, do your own research. Now, going back to this, Chaikin also brushed off Burry as just the latest market doomsayer. Like there are a lot of people who say, you know what? I'm just going to go on here and say the total opposite, right? So there's a thing about being a contrarian. I'm often called a contrarian, right? And there's also people who will take a contrarian stance, but just say something outlandish for shock value. And it's not really contrarian. They're just doing it because they know it will get a reaction by the people. Listen, a lot of these folks, these outlets, these media people, even as investors, they play on the hearts and minds and emotions and purse strings of people. They know how to manipulate people and they use it with their words. That's why social media in this 24-hour news cycle on the internet is so dangerous. I see so many people get caught up in it. All right, so let me just finish up this and we will get on our way. All right, so taking also brushed off Berry and just the latest market, excuse me, y'all. Taking also brushed off Berry and just the latest market doomsayer and suggested his only notable achievement was predicting and profiting from the 2008 housing crash. The contrarian bet was chronicled in the book The Big Short, and actor Christian Bale portrayed Berry in the movie adaptation, which made Berry a household name. I wouldn't say he's a household name, but a lot of people know him. There's always a Michael Berry out there, whether it's some Bond guy or whether it's Stan Druckenmiller. Now, Stan Druckenmiller, I'm a big fan of Stan Druckenmiller. He did some stuff. At some point in time, or Paul Tudor Jones, Chicken said, they are a lot smarter, by the way, than Michael Berry, with a lot more of a track record. That's true. A lot of shade there, though. A lot of shade, but he's telling the truth. He's telling the truth. But listen, at the end of the day, when you're thinking about your investments, make sure you are making up your own mind. Sometimes you just got to shut out everything, all the noise, turn your phone off, do your research, do your analysis, and then come up with your thesis or your ideas for investing. All right. So again, I appreciate everybody being here today for the Finance Rebel Show. What questions do you have about money? Go ahead. I see a couple have come in before. I will definitely get to those, and I'll either incorporate those into the show or do a singular episode or video for them, explaining them out. All right. So I appreciate you all joining me today with the Finance Rebel Show. Again, I'm Kamari Ellis. Remember, save, save, save. Study, study, study. All right. And make sure you invest. Until the next time, Kamari Ellis out.